Hi, and thank you for joining me as we go line by line on a CD closing disclosure for a loan. Here we're going to go over each line and talk about the charges and who is responsible to pay what for the closing. My name is Anna Kaba, and I am with Bright Title Services. All right, now here in this section we have the closing information. Okay, in this section of a closing disclosure, you're going to see the date of closing, disbursement date, and etc. Also, you will see the borrower name, seller's name, and lender information. Sales price will be here, and the loan information as far as how the term of the loan, the purpose of the loan, the product, and the loan type. In this case, in this scenario, is an FHA loan. All right. As we continue to go down on this settlement statement, this section here is going to break down the loan amount. In this case, is $353,479 and an interest rate at 4.25%. This section here, it breaks down the monthly principal and interest. So you will see this here. As I continue to scroll down on page 1 of this settlement statement, you're going to see the projected payments of how much this client will be paying on a monthly basis. This section here will give you the principal and interest that we've seen up here. Mortgage insurance, because this is an FHA loan. And the estimated escrow, they have escrow the property taxes and the homeowner's insurance, giving them a total of their monthly payment of $25.26.25 in this case. All right, this section here is just breaking down the estimated tax, insurance, and escrow, okay, which is what I mentioned here earlier. As I continue to go down this page 1, you will notice the closing cost total, which I will break down, which is itemized on page 2 and 3 of this settlement statement, and the final cash to close. Normally, this number here, once I balance out with the lender and we come to a finalized number, this is what your lender or myself will send out your client an email with our wiring instructions on where they need to send their cash to close and how much they have to send. All right, so let's continue to page 2. Page 2 is just a breakdown of an itemized section of all the fees that the buyer is bringing to the closing on the transaction of his purchase of his home. Now, section A are the loan costs, and a settlement statement, it is broken down by different sections, section A, B, C, D, and etc. Okay, so we have a column here for the buyer, column here for the seller, and a column here for paid by others. So every person has their own column. So the buyer has 2 columns. The buyer has an at closing column and before closing column. Okay. The seller has an at closing column and a before closing column. And of course, the paid by others will have their own. They just have 1 column. Okay. Now, the buyer, we're just going to focus today on the buyer side. Why? Because the settlement statement is really numbers for the buyer, because this is how we find out how much the buyer is bringing to closing. Now, on a buyer, section A, loan costs, you will notice that you have origination fee, processing fee, underwriting fee for the lender. Here in this section, at closing, this is how much the buyer is bringing to the closing. That what the lender fees are. You see line 1, you have line 2, origination fee, you have line 3, processing fee, and underwriting fee on line 4. All right, this is at closing. So that is what the buyer is bringing to closing for the lender's fees. Section B, this is services borrower did not shop for. Appraisal fee, which was paid when? Before the closing. An appraisal is always done before the closing. How the lender gives you a loan based on the need to know what is the appraised value. So it is done before the closing. They don't have to come with that money again at closing. Now you have credit report, flood certification, mortgage insurance premium, tax services. This is all fees that the lender is charging for the third party references. And these are all third party fees that the lender has. This is not going to the lender. This is just for the third party, for the companies that provided these services for the lender. Okay, you will always find this in section B. As I continue to scroll down, now we are into section C. In section C, These are the services borrower did shop for, and this is where you will see all of the title charges, okay? Now, the lender will not give your buyer a loan unless your buyer purchases title insurance, and the title insurance is based on the loan amount and the sales price. Now, line 1 is a survey fee, line 2 is a title insurance fee, line 3 is a lien search fee, as you can see, 4 settlement fee, 5 title search fee, 6 wire transfer fee. All right, let me break down the fact that you will see the lien search and the abstract search here on the buyer side. Normally, that is a seller's fee. But in this scenario, in this case, the contract was written as the buyer would choose the title company. Because the buyer chose title company, the buyer became responsible now to pay the abstract fee or title search fee and the lien search fee. Normally, that charge and this charge would be here on the seller side column. So please be very aware that when you draw up a contract and you use a Miami-Dade borrower provision, it's a seller fee, or if the seller chooses title company, then the seller is responsible. But if your buyer chooses a title company, then yes, the buyer is responsible to pay for those fees. All right, so as we continue, I will continue to scroll down, and we're going to go to section E. And in section E, F, G, and H, you're going to see the other cost that is pertaining to this closing statement. For example, section E. Section E is the recording fees. This is where you will see the recording of the deed, the recording, in this case, the doc stamps for the mortgage, okay, because there is a mortgage, and it's based on the loan amount. In this case, this is what the buyer is paying for the mortgage, and the state doc stamp for the sales price, which is a seller's fee. You see it in this side. These are recording. This is what the county charges for the sale of the transaction and recording of a mortgage and recording of a deed and the sale of the property. All right. Now we're going to continue to scroll down to section F. In section F, these are prepaids, the homeowner's insurance, which the client can shop for. Okay. And this is the homeowner's insurance here. We're going to pay that. We're going to cut a check to the insurance company and pay the insurance. Line 3 is prepaid interest from the date of closing to the first of the month. This prepaid interest that the lender, okay, charges, now all of these are part of the total of the cash to close that the buyer came to closing with. Okay, so keep that in mind. This prepaid interest is the interest that is from the date of the closing to the first of the month, which will be applied for the following month of the in this case will be April. All right. As we continue to scroll down in section G. Section G is the initial escrow payment at closing. Remember, we talked about the escrow that the lender takes in advance. For example, line 1 is homeowner's insurance, and they broke down the insurance, which is here. They prorated it for 3 months. As you can see here, it's $116. They took only a total of 3 months in advance because the closing was done in March. So they collected in advance $349 for the first 3 months. Why? Because as you go and pay your mortgage every month, you're going to be paying escrowing your homeowner's insurance. So they're going to add it up, and by the time next year at this time in March, they're going to have a full total of this to pay the insurance company so that you can have insurance for another year. Line 3, you have property taxes. They collected property taxes for 7 months at $426, which gives them a total of $29.85. They always like to keep extra money when it comes to taxes, so that when it comes, remember, taxes are estimated. We do not have the proper amount because property taxes are paid in arrears, and due to that, we don't know what the taxes are going to be when it come out now in 2020 November. So they collect enough so that they can have some cushion, additional to when you're paying your monthly mortgage. Your taxes that's being escrowed is going to be accumulated, and they can pay the taxes in November. If you continue to go down, this is an aggregate adjustment that the lender gave a credit to the buyer. For whatever reason, they have their reasons why they, depending on the amount, is always different depending on how they need to cure the loan or the fees, to make sure that they're in regulation. Okay, so that's never going to be the same. Every person is different. Every transaction is different. All right. So we continue to section H, and in this section you will always find any real estate commission and things of that nature, any escrow holdbacks or transaction fee if there's any. Okay, then you will see it in this section. Now you will have the real estate commission, and this is of course on the column here. You see seller paid. That's the real estate commission. It is a seller's responsibility to pay commission. This title owner's insurance policy is, you see it says $63.25, but this is just the way that they break it down, the owners and the loan policy. All right, so it is very important that you understand that. Here in this section you will notice that it says E plus F plus G plus H. This is all the sections added together, and this is where you get your total number of the $61.97.46. Section J here is the total of the closing costs, and sometimes the lender will give a credit. Okay, so you will see that credit here. Again, every lender is different, every situation is different, so the credit is not always the same, but in this case they gave the buyer a credit. As I continue to page 3, this is just a calculating cash to close that, you know, according to what the lender has, you will see it here. But we do not really dwell on that because this is just them giving you some kind of synopsis of what the loan is incur, or the charges that the buyer incurred. As I continue down to the summaries of transaction, you have the borrower transaction, the seller transaction here. You have due from borrower at closing $387, but the sales price was $360. So the $360 sales price and plus all of the fees that the buyer has to come to closing, this is the total. Now you're going to see a breakdown of the closing costs, which was a total of $19,000, and then you see attached additional information, which is the $79.72. As I continue to go down and scroll down on this CD, you will see here in section L, this is stuff that has already been paid by the buyer in advance. For example, the escrow deposit. You will see the escrow deposit here, depending on how much your client gave. You will see it in this section. Here you will see the loan amount, how much the loan amount that the lender is giving them. So this is all credits. As you can see, these are all credits. Here, if there was some kind of seller credit, you will see it here. But in this case, there isn't a seller credit, so you don't see it. Here, the realtor credit. The realtor gave a credit. In this case, it's because the realtor is the buyer in this transaction. So from his commission, he gave himself a credit, okay, from his commission that he was supposed to receive at the closing. And the adjustment for items unpaid by seller, this is because the proration of the homeowner's, the property taxes, you will see it in this section. Due to the fact that the taxes are paid in arrears, we don't know the taxes for November now in 2020, so we just go by the estimated amount from last year. So here you will put that from the first of the year, the 1st of January, to the day of closing. This is the amount that the seller credited to the buyer. So when November comes, the buyer pays the full taxes. This section here is on the seller's behalf. The seller had a mortgage, so now we collected for the mortgage for the seller to pay at closing, minus his closing costs. These $20,000 here is the commission he paid and every other expense that was pertaining to his deal. You see it here. As we continue, this is the credit that he gave the buyer, and at the bottom you will notice where you will see the cash to close from the buyer and the cash that the seller is receiving. So in this case, the seller received $78,000 and the buyer came to closing with $19,000 with all of his credits and expenses. All right. Thank you for watching. My name is Anna Kaba. Again, if you have any questions, we are here to serve you from 9 to 5, Monday through Friday. Thank you.